Thank you, Jeff. And this feature is brought to you by the leader in short-term insurance, providing tailor-made solutions for most of South Africa's top 100 companies. Santam, rest insured. I guess on a day like this, Wayne, where shares in South Africa are following very strongly what's going on in the United States, you've got to look at some of the losers and ask why. Data down 7.5%, Afrox down 8%.
Yeah, look, Afrox has been very funny, I must say. It's been almost difficult to call because this is a high-quality company. The problem with Afrox is it's got a 12 price-earnings ratio, which means it's about 30% more expensive than the market.
So it's all relative valuations.
All on the valuation story. Yeah.
But some huge increases. If you'd gone into that rebound portfolio of ours, you would be looking very good today because SAPI up 22% and Old Mutual up 15%.
Yeah, there's been some very, very big rebounds. It's quite interesting. I mean, the market's up 3% in total, but remember, we closed too early. The Dow's up 4%. So if the Dow carries on, our market will be very strong tomorrow. But it's really across the board, except for the gold shares. Gold's down. So it's very typical. When everything else was going down, gold was going up. Now everything else is going up, gold shares are going down. But some strong moves. I mean, Sasol up 7%. The only real weakness, which is obviously to do with the stronger rand, the only real weakness on the financial and industrial board is Richemont, which is down 3-odd%. But that's really a rand story, I would think.
We need to look a little more closely at what's going on in the United States. On our market commentator podcast today, I chatted with Corky Koyman, and it's up on MoneyWeb, so one can go and read through and, in fact, listen to the 10-minute conversation there. But in essence, what Corky says is that the market is now betting that this new bailout package, in fact, might work, and as a result of that, Wall Street is flying.
Look, you got to whenever you see markets turn up or turn down, your immediate reaction is to look at that day's news or the most recent news. The reason why the market's rallying is because it fell 50%. In other words, it had just such an enormous and quick fall. Now, this might be the trigger for some type of rally, but understand the reason why we're getting a rally is it just totally and utterly collapsed down to incredibly low levels. Now, I mean, who knows how far this rally can go? And in all likelihood, it is a bear market rally. But understand, a bear market rally can be incredibly strong and last a long time.
Now, let's just explain that to people. A bear market means the general trend is downwards.
Correct.
But nothing just falls. Sometimes there's a correction.
What actually happens is, I mean, this is very, very rough now. Let's say the value of the stock market falls by 30%. Because the economy is bad. But what happens is the stock market's actually fallen 50%, so it rallies the other 20. In other words, minus 30 is the right number, just that initially it just falls too much, it overcorrects, and then it does some sort of correction up to a better level.
So if you're a long-term investor, you're probably stuck anyway in your shares, but if you're thinking of taking money that you've got in cash and putting it into the share market, if you...
Overseas, I would think it's probably okay. I mean, look, understand... From this level, your 5-year outlook or 10-year outlook on shares overseas is actually reasonably good simply because it's 50% lower than what it was. So even though the economy and everything's incredibly poor, you can actually make quite a decent return from shares simply because they have collapsed. I mean, they've gone back to 1997 levels. I mean, 2 weeks ago they were at 1997 levels. So
overseas.
Overseas, not in South Africa. So you've had the most almighty, the biggest collapse in living memory. After that, the market can actually do quite well.